Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And the good news is at least we have moved back into the green. So we're off the lowest point of the trading session, though the Nifty continues to underperform the broader markets because the Nifty is up just around 10-20 points, whereas there's quite a bit of strength in the broader market with the advanced decline ratio looking quite steady. It's Bank Nifty which is also doing the heavy lifting today because that index is up almost 200 points the last time I checked. So a big outperformance coming in from the banking space. And that's been led by a lot of the PSU banking names as well. So UCO Bank, Bank of India, Central Bank, Bank of Maharashtra. They were some of your top gainers. And then, of course, Bandhan Bank too is up around 5%. So we are watching out for that stock as well. Separately, it's the auto data which has come in better than expected, at least for the two-wheeler space. And that's the reason the likes of Hero Motocorp as well as Bajaj Auto are quite excited in the trading session. In fact, Hero Motocorp is one of your top gainer at the index level with over 3% gain coming in. Oil and gas space is also in focus. Of course, crude oil prices spiked 5% overnight. So we saw that number of 85 on the crude, on the Brent crude. And that's the reason BPCL, HPCL are down in trade. But the gas stocks, the likes of Mahanagar Gas, IGL, etc., are reacting to the fact that the prices have remained status quo and the credit park recommendations are still under consideration. Lastly, thank God, it's a truncated week and RBI
confused it with a Friday.
Yeah, I mean, it feels like a Friday, right? But RBI monetary policy meeting lined up, so it's not going to be all easy this
Not
week.
at all. You've got the RBI monetary policy. You've got the global markets, which will be up and running. So I think that is the bigger trigger, or the fear rather, that ours is a truncated week with just 3 trading days. And more importantly, you'll also have the advanced data for most banks actually come out. 2 already out as of yesterday. And then, of course, you'll have the IT previews as well trickle in. Remember, soon after this truncated week, we'll be hit with IT earnings as well. So lots on our plate. But let's tell you what else has been making headlines this afternoon. And the gas stocks, definitely, they're the ones which are in focus. The decision on domestic APM natural gas prices from April 1st has now been deferred to a later date. So things stand status quo. That segment definitely is in focus, the gas stocks, that is. KPIT Technologies, and Anisha will throw more highlight on this. That's one of the biggest losers this afternoon. JP Morgan, remember, initiated coverage on this one with an underweight, the target price at 520. Now, for a stock which was at its 52-week high on just Friday, for that to nosedive the way it is right now, 14% lower, no less, for KPIT Technologies as we speak. And of course, order wins galore once again for RVNL, for GR Infra, for Tejas Networks. All these stocks are abuzz on the back of order wins. But what about the market? No buzz there really. Let's take it across to Kunal as well as Naresh. And Kunal, just about back to where we started off in trade, just lurking around that 17,400 mark. Calm before the storm, or do you think it's going to remain calm?
I think let's hope it remains calm. I think it's a market which is digesting the gains which we had seen on Friday. So 250 point plus gain on the Nifty, and I think more than 500, 700 points on the Bank Nifty. And after that kind of an up move, given the kind of pessimism we were already trading into, so I think it's a good day for the indices to remain a bit more consolidative. But I think the today's move is more towards the mid caps and the small caps. So even if you look at the start of the day, it was the mid caps and small caps which continued to outperform. The indices respectively continued to outperform. There is still a lot of activity and trading buzz just around the mid caps and small caps. A lot of stocks seeing a follow through. There are stocks which have been recovering from their 52-week lows, as well as stocks which are seeing breakouts for themselves. So I think that's where traders should be concentrating for maybe the next couple of days. The bias on the index would remain bullish, but I think just for the next couple of days, the action could be more towards the mid caps and small caps.
Naresh, do you concur that mid cap, small cap is where the action is going to be? Because the action today is also in the Bank Nifty.
So banks have continued to be the leader whenever the Nifty has bounced back. So that is normal, given that it's a high weightage sector for the index as well. But the mid caps and small cap indices have underperformed over the last 3, 6, 12 months. And that is where there is a lot of catch up to be done. And that is where we are seeing that catch up today. Even today, we are up 0.5% or more on the small cap and mid cap indices against a flat Nifty. And this should continue going forward. But overall, the trend is positive for the Nifty and Bank Nifty as well. After that Friday move, we should take a slow and steady ride towards 17,600 to 17,800. That's the view going forward for the near term.
Right. Okay. Kunal, in terms of individual stocks then, what is it that you're betting on?
So I think from the short-term picks or intraday picks, I would look out for two buy calls over here. Century Textile would actually be the first stock which I would recommend a buy at current levels. My sense is that the stock is inching towards a classical breakout for itself. Trading I think closer to 655, so would look out for 650, 688 as a target for Century Textiles, and stop loss could be kept at 640 mark. And the second stock which again looks very attractive from the charts is Vatek Wabag, trading I think at 360 approximately, so would suggest a buy. Targets of 385, stop loss 354.
Okay, so those are the top recommendations coming in from Kunal. But in the meantime, let me go across to Shrishti as well, because the auto stocks are gaining and how. In fact, the auto index is the biggest gainer today with a gain of 1.25%. And large part of that rally is actually coming in from the two-wheeler space this time around, Shrishti.
Well, yes, absolutely. So the financial year end did bring some cheer to all of these auto names, and especially from the likes of commercial vehicle, where we were expecting the sales to be holding up. And despite all of those macro headwinds, what we were expecting for commercial vehicle plays two factors at play. Firstly, the underlying volume was still quite strong, and the other big reason is that going ahead in the month of April, starting today, all these companies have actually hiked their prices. So because of that, the pre-buying was one of the factors that supported the March sales data this time around. And not just that, all these companies from the commercial vehicle pack, from the likes of Ashok Leyland, Eicher Motors VECV, as well as Tata Motors commercial vehicle, have surprised on to the number front, beating the estimates for Eicher Motors as well as Tata Motors, Ashok Leyland. All these companies have posted a gains of over 30% on a month-on-month basis. That's the growth number I'm talking about. From the two-wheeler pack, a great recovery is what we have witnessed from the domestic plays of TVS Motors as well as Hero Motocorp. Not just they have surpassed the expectations, but if you see the underlying volume for Hero Motocorp, that has seen a growth of 32% on a month-on-month basis. When it comes to Eicher Motors Royal Enfield, so FY23 has been a record year for this particular company, but for the month of March, it was almost a flat growth. When it comes to the passenger vehicle segment, herein what we are getting to know is that there has been some fall in the new and the dealers inquiry, but despite the fact this time around Maruti Suzuki and Tata Motors were seen to be holding their sequential sales data, but M&M has outperformed with a growth uptick of 12%, and this wherein for the automotive division the company posted a sales of 66,091 units. And lastly, due to the unseasonal rainfall, that was one of the factors hitting the tractor sales data, but despite the fact, Escorts as well as M&M has posted a sales growth of 30% on a month-on-month basis this time around as well. So a good set of numbers coming in, but clearly the outperformance have been the commercial vehicle as well as the two-wheeler names. Back to you.
Okay, Naresh, if you had to take the top bet when it comes to the two-wheeler space, which would be the stock on your radar, is that going to be Bajaj Auto?
So technically it is clearly Bajaj Auto now. After initially it was always about TVS Motor, but Bajaj Auto has finally come out of this possible range which has been there for a really long time. So 3950, 4000 has been a tough zone for the stock. The last time it came in July, August, it again flopped back, but this time there's a good possibility it breaks out of this range and gets towards 4400. So I would be more interested in Bajaj Auto, which is where the risk reward is also interesting, because if you go back a little, say longer term also, the returns have not been great for the stock. The stock used to be 3,400 in 2018 as well. So over the last 5 years also, it has not done anything. So Bajaj Auto is the one which would be on radar for a move towards a new all-time high.
Okay, that's the take coming in, and what you're saying in terms of the monthly sales numbers, which is better when it comes to the two-wheeler majors. GMR Infra, Idea, IEX, Delta Corp, Bandhan Bank. It's an unusual list of winners out there within the liquid universe. And of course, the losses are concentrated for the gas stocks and for the OMCs. So IGL, BPCL, HPCL, MGL, of course, is starkly lower. It's down almost 6% as we speak, and a 4.5% dip coming in for both BP as well as HP right now as we speak. But on that note, let's welcome on board our next expert as well, and talk about what he's making of the markets right now. We have Abhijit Choksi joining in on the show. Abhijit, hi, afternoon. Good to have you on the show. We were just chatting about as to how it's a truncated week, but the news flow is extremely heavy. The RBI policy, banking updates, IT previews trickling in, and global markets would be on. What is your own sense on what we're headed in for?
Yeah, Hi, good afternoon. Thanks for inviting me. So yeah, I was just discussing with a friend recently that last year we saw like all the new age companies going bust, especially massive 40-50% collapse in the US markets. And now this year the banks have been battered. So going forward, the sentiment is definitely looking a bit weak. But I do see a value in certain pockets, especially in the Indian markets. So I will be discussing about certain stocks. So just a standard disclaimer as I run a SEBI registered advisory that some stocks I might be discussing will have, I might have a position in that. Thank you.
Okay, so let's discuss then those stocks because I understand you did have positions on Orient Electric, Garden Reach, etc. And I'm not sure if you still track them, but Orient Electric is taking it on the chin right now because of the change coming in at the leadership position. What's your take in terms of the incumbent as well as the new person that's going to be at the helm?
Yeah, so the Orient Electric is one of my old recommendations. We have given a partial exits also to all our registered clients in that. Although partially we are still, it's a hold for all of our clients. And it's being an FMCG play, it's a safe hold going forward for next 2 to 3 years horizon. And talking about sector wise, I'm more tracking infra at the moment. In infra, for as far as mid caps is concerned, I'm liking NCC, GMR airports. These are the two companies which I'm tracking, and I'm liking them for medium to long term. Mainly because all the budgets we have seen consistent rise in the public sector spending. So now the trickle down effect is happening. So in infra, these are the two. And if somebody wants to have a safe bet, then a large L&T would be my pick from the large caps. And also in auto ancillary, I'm liking Minda Corp and Uno Minda. So these both will be my picks from the auto ancillary sector, which has been holding up amidst the latest carnage. And in capital goods also, I'm liking ABB and Power India. So capital good is also one of the sector I've been focusing on lately.
Okay, those are some interesting recommendations that are on your radar. Abhijit, afternoon. Wanted to also understand your take on the consumption space. Do you have any preferences within this area looking at mid and small caps?
So in consumption, one of the recommendations I had given was from a notorious group, Adani Group. So Adani Wilmar was one of my pick, and I continue to hold partial positions in that. But other than that, again, all the large cap names like Bata and all would be a safer options going forward.
Lots more to talk about. For now, we'll slip into a very quick break right here on closing trades, 17,375 on the index. Be right back with lots more market talk. Stock of the moment is clearly KPIT Tech because that's down 15%. But the sector of the day is perhaps oil and gas, with gas stocks and the city gas distribution names taking it on the chin, the likes of Mahanagar Gas and IGL. And that's because the rates have been kept status quo for now. We have the man of the moment, Mr. Kirit Parekh, joining us to talk to us about what the future could be and what could be the sustainable rates going forward. Mr. Parekh, thank you so much for making time and speaking with us. That's exactly my question. What's your expectation as to when the cabinet will consider and approve the recommendations coming in from your panel as well?
You know, I think cabinet ways are mysterious, so I don't know when they will do it. It's very difficult to figure that out. Yeah, you know, as economists, we think about one thing, but politicians have to account for many other considerations. So I think what considerations is stalling them, I don't know, but maybe they will soon do it. I'm very hopeful because we had in our committee representatives of all stakeholders and they all have signed it. And I think we've taken care of all the concerns. So by and large, I expect the government should be clearing this, mostly what we have suggested in a short while.
Highlight what were the concerns from the cabinet's end, because you've been pretty categorical in recommending that $6.5 ceiling.
Yeah, the ceiling is let me say there is a floor which gives an adequate return to the producers of the gas, and there is a ceiling which is linked to such a thing that it would really ensure that the CNG users and the PNG users, the pipe natural gas and the compressed natural gas users, will get the gas at prices which are competitive to their alternative fuels, which is diesel for CNG user or LPG for PNG users. So I think the ceiling is fixed in a way that it would always be less than cost of imported LNG, as well as it would be competitive for other products, so that people who are using PNG pipe natural gas for cooking will have incentive to continue to use this because this is cheaper than their alternative LPG. And people who are using CNG for cooking, for driving, for their vehicles, will also find it cheaper than alternative diesel.
Right. Mr. Parekh, can you just walk us through as well what some of the other recommendations are? Because I understand that crude link pricing mechanism as well is looking to be adopted.
Yeah, see the main if you look at the natural gas pricing, we're about many regimes. One of the major thing is the APM gas, the administered price mechanism gas, which is what the price, the gas that is produced by ONGC and OIL, who were given these fields without any, through nomination, without any competitive bidding. And therefore the government thinks that they should really control the price and the allocation of this gas. And they constitute nearly 70% of our gas production in the country. The remaining thing are about 13, 14 different regimes, depending on whether it was profit sharing, cost sharing, revenue sharing, or whatnot. And these fields have pricing freedom. They can price the gas at whatever they want. But this price has a ceiling which the government keeps revising from time to time. There is one set of fields allocated after February 19, 2019, which have total free pricing and marketing freedom. So we have given pricing and marketing. We are suggesting that everyone should have pricing and marketing freedom, but have some time to get there. And so by 1st January 2026 or 27, they should all have freedom for pricing and marketing. So, and the ceiling for $6.5 per million BTU for APM gas, that the administered price mechanism gas, it was fixed in a basis that, what will be the likely cost of imported LNG. Now, if suppose the price of LNG falls to almost $2.5 a million BTU at the port site in the United States, it will take roughly 15% of the gas would be required to liquefy it, then to store it, to bring it, then to regasify it. So the cost of imported LNG converted to gas would be not less than $6.5. That's why the $6.5 ceiling is fixed in some sense. Secondly, that the gas prices to be determined with respect to the price of crude oil that India imports. Now, that will ensure that the price of APM gas would always be such that it will be less than LPG and it will be less than CNG for diesel for both of them. So that I think the users of PNG gas, the urban household, and the CNG transporters would have a continued incentive to use this.
Right. No, that sounds very, legitimate and rational, sir. But just, Mr. Parekh, before we let you get, I know you alluded to this earlier as well, but any indication of what could be, let's say, the potential concern? Have they come back with any questions recently? And if you had to guess, and I know your guess is as good as mine in this, any idea in terms of whether 15 days, 30 days, when could this be accepted, the recommendations?
But I have really no connection. Exactly, I submitted the report, and after that, I haven't talked to anybody, and nobody has talked to me, excepting news channels which ask me questions occasionally.
Mr. Parekh, we'll hope that those recommendations get accepted soon, and we have one more reason to chat with you at that point of time. But appreciate you joining us on the show today. So that's Mr. Parekh talking about his recommendations. Quite hopeful that they will be considered and accepted by the cabinet. As of now, he doesn't see any major concern. And most of the mechanics are already out with respect to what the floor and the ceiling as well as the phased, outcome of this is going to be. But just shifting focus and quickly talking about KPIT Tech as well, because that stock is down 14%. JP Morgan had initiated coverage this morning with an underweight stance and a target price of 520, which versus yesterday's closing suggested a slide of almost 44%. The reason why they had the underweight rating is, despite the stock being very close to all-time high levels, is that they thought that the EBIT margin of the company are lower than the peers. So when you compare it with the likes of LTTS, Tata Elxsi, Persistent, etc., the margin profile is lower. Plus, there's a concentration risk coming in. Concentration both in terms of the sector that they focus on, and maybe we can pull up those graphics for you as well on screen, that there is a bit of concentration risk when it comes to the auto ER&D sector that they're focused in. They do not have any other diversification. And even if you look at the top 25 clients, they contribute almost 84% of the revenue. So that's the second sort of concentration risk coming in. Lastly, with respect to valuations as well, they're quite excessive at 50 times forward earnings. And that valuation means that they are factoring in a growth of almost 24% on a compounded basis for next 10 years. The stock has been delivering over 25-30% growth, but the key question is, can it deliver 25% CAGR for the next 10 years? Maybe not, and that's the reason the stock is coming under pressure. I don't know if we still have Abhijit with us, but let me first go across to Kunal and just get his take as far as the stock price is concerned. Kunal, will you be a buyer after the correction in KPIT?
So not on immediate basis, but I think possibly the stock retests the 750 marks in the next couple of days, and if there is no major kind of a price crash like a reaction what we've seen today for KPIT Tech, then probably you might expect the stock to get into a mild bottom formation process, because today also the stock, when it fell below the 800 levels, it went into a deep oversold territory on the hourly charts, and then there was a bounce back for the stock, 30-40 point bounce from the intraday lows. So I think the double retest of the previous lows could probably be a good opportunity to try and create a contra position for KPIT Tech, not at current levels.
Right, okay. That's the take coming in right now on some of these names, and KPIT Technologies, of course, is one such case in point. But Anisha, highlight for us, what did the note read and why this downgrade on the stock when it was at a 52-week high just on Friday?
Oh, well, yes. And as we pointed out, I think valuation is the biggest concern that is there on the stock. 50 times the forward earnings. And despite the growth rate that is delivered for now, at least 25% growth on a sustainable basis is clearly not doable. And I think, or not clearly doable, at least the street is not, giving it the confidence that they'll be able to do that.
Yeah, and a sharp downtake coming in on the back of that. There's, of course, the gas names, OMCs, they're all in the red as we speak right now. And within the Nifty, there are, of course, the Adani group of stocks also which are underperforming. ITC, Unilever as well, both those stocks are down. TCS sitting on the sidelines. Reliance, that big performer from Friday, that as well on the sidelines as we speak. But Abhijit, if I could get your take on banks, just wanted to understand how is it that you're dissecting within the private banking space, and whether or not you are an investor within PSBs at all or not.
Yeah, so banks I have specifically avoided since my career, because I've never understood their balance sheet, to be honest. So banking and financial. However, there are certain NBFCs which I have been liking. So one of the stock I would like to recommend is Poonawalla Finance. So earlier it used to call Magma FinCorp. So now there's been a promoter change. So I'm extremely bullish on this stock from medium to long term point of view.
But apart from Poonawalla FinCorp, the stock which you're quite bullish on for a long term, what about Hitachi Energy? Because though that was a recommendation coming from you, could you help us understand what the fundamentals look like? Because it's not very very well researched or covered stock.
Right. So Hitachi Energy was again formerly known as ABB Power Products. So basically, it was a demerged power grid business of ABB. So I have this knack of sticking to quality, and this is one of the few quality MNC level business you would find in the listed space. So right now the top line is around 4,200 crores, and the market cap would be around 13,000 crores. So especially these kind of businesses will always look optically expensive on the face of it, but going forward, looking at the order book and the sector in general, I believe that it has a solid potential. So I believe it's like a compounder as well as a potential multi-bagger going forward.
Abhijit, IT as a space, that's something that you're avoiding?
Yeah, so we have reduced massive exposure. So Persistence Finance was one of our recommendations, which we had recommended around 1100 levels. So almost 75% holding from Persistence we have exited. So and LTTI is also it was one of our recommendations. We have majorly exited from the IT as a sector at the moment.
Thank you so much for joining us today and talking to us about your top stock recommendations. So infrastructure, top of the heap, and NCC, GMR, etc. and L&T are some of the counters he's quite bullish on. But let's get some of the closing trades from our chartists as well. Nuresh, what's the trade that you are executing at this point of time? Anything interesting?
So looking at a bounce back trade in Laurus Labs, the stock has corrected from 700 plus to 300 levels. Today is the first reversal candle which is seen, and this is a risk reward trade. You're expecting a bounce back towards 320, 330. And keeping a strict stop loss at 297.
About you, what's the stock on your radar?
So that will be Bajaj Auto. We discussed the stock in the morning chart busters, how the stock is on the verge of a triangular pattern breakout. This is almost a 1.5 year triangular pattern breakout for Bajaj Auto. So that's a stock which would be keen to buy.
Guys, what about JBM Auto, RVNL, Motocorp, GMR Infrastructure? Some of these stocks are bouncing back quite sharply. Nuresh, anything that you would want to recommend or at least on your radar? JBM Auto, RVNL, Motocorp?
So Motocorp is something which I continue to like. The stock has consolidated well. The whole news around pre-call as well as volatility over the last 3 months has got digested. The stock has made multiple bottoms around 190.95. The stock has a breakout about 235, 240. Once that is taken out, we could be going towards 280, 300. But the structure is pretty positive on a longer term basis. A huge triangle formation out here. So eventually, I expect the stock to be at 280 to 300 levels. A buy at current levels as well as on dips. So this is one of the top bets in the auto ancillary space, which looks interesting.
Quick break. As we do that, let's hear our Titan's Managing Director speaking to Aishwarya Patil, talking about surging gold prices, how that's not a cause of concern for their business.
The diamond jewelry contributes to about a third of our business, and it will continue to be of that order because we are pushing all parts of the jewelry business, particularly the gold and the wedding jewelry business.
So gold prices have peaked out almost at 60,000 per 10 grams at this point. Do you see any sort of weakness in that sense? And also, you know, luxury has been doing well. The luxury segment has been doing well. Value segment has been on the weaker side. Do you see that impacting your portfolio overall in terms of watches, jewelry, etc. throughout the category?
Actually, the jewelry gold prices have, climbed over the last 2 decades to the current level. As long as they remain stable and they don't yo-yo, people get used to prices of gold, and also the overall store of value, safe haven aspect of gold also kicks in. So we're not really worried about the price of gold that much. And the households that Titan Company derives its business from are the top 2 or 3 income segments in the country, and they are typically protected from the impact of inflation, which is what has affected the lower middle class and all the products which they buy. So we are better off compared to other industries.
So luxury is doing well. Have you seen that sort of pressure in the value brands like Sonata, and in the jewelry business, like you have Mia, for example. So have you seen sort of weakness here, and maybe the luxury segment like Zoya is doing much better in all the categories that you have eyewear
Yeah.
to?
Yeah, a brand like Sonata has been slower than a brand like Titan, but Mia is not actually in the same category as Sonata.
Correct.
It's just in the portfolio at the lower end.
Yes.
But the customers for Mia are not like the customers for Sonata. But overall, Titan companies' brands are placed favorably in this context, and we don't see any issue going forward.
Okay. So in terms of store expansions overall in all the portfolios, wearables, jewelry segment, could you give us a lowdown?
We are continuing to be very, very aggressive on this.
Eyeing some of the stocks as well that are in the spotlight in today's trading session. Some of those gas stocks, as we've been flagging off from the get-go. You've got a KPIT Tech as well, JP Morgan with that underweight rating and a 520 rupee target price, and something like an RVNL, etc. They've got order wins, so those stocks are continuing to remain a buzz in trade. Let's get in some chart checks going as well then, and Naresh, given the fact that we were just talking about a lot of these infra stocks, what's your view on the charts? The entire gamut of capital goods and even infrastructure names, what's standing out according to you?
So in the infra names, like I've been recommending NCC for quite some time, that has done really well, and still the trend looks okay for a view to for a target price of 120 plus. Then second is HG Infra, which continues to be closer to a 52-week high. The new one, which is broken out, is Ahluwalia, which has now given a breakout above that 500-550 mark. So that looks interesting. Today, we are seeing a breakout move in GMR airports. So overall, the whole infrastructure-related names look interesting. KNR Construction is another which could be on radar. The stock has been consolidating at 250, 270 for a really long time. And it is one of the stocks which has a good history. So KNR looks interesting at current levels. So the whole infrastructure pack looks interesting. The small cap and mid cap have done better. Continue to like L&T, but the stock is yet to break out and sustain over the 2200, 2220 mark. Once that happens, that is a stock which could go towards 2500, 2600.
Some of the interesting movers then for the month gone by on the Nifty 500, you had, of course, some of those Adani Group stocks that did dominate after that ferocious comeback. So an Adani Green, for instance, or an Adani Transmission, just pull up the 1 month chart of these counters and you'll see those kind of gains coming in. 1 month chart that I'm flagging off for these stocks. Electra Green Tech was another one that had a pretty decent month gone by. You had a JBM Auto as well that gained traction. Manappuram Finance saw a double-digit gain for the last 1 month or so. And you did have something like a Glenmark Pharma that stood out. Kunal, get in your take. Any of these charts look encouraging? Good to go for more?
So yeah, Manappuram Finance, Glenmark would be the two names which I think Manappuram I had already recommended at 112-13 levels. I think even at current levels of 125, it looks very attractive on the charts because this is now more of a strong recovery stock, a stock which had been beaten down significantly from those 219 to 20 levels a couple of years back. It went sub 100 levels and now it's getting to a recovery phase. So I think this should be a very good recovery for Manappuram Finance, and possibility of the stock even coming back to the lifetime highs possibly in the next 6 months to 12 months is pretty much high for the stock. So traders should look to try and ride the trend, keep on buying the stock whenever it gets into a corrective phases and book profits when it comes back to the overbought nature of zones. Even the likes of Glenmark Pharma. So in the morning I was highlighting that Glenmark, Zydus Life, Aurobindo Pharma, these are the three names which are actually popping back on the radar, where these stocks have given breakouts on multi-week, multi-month time frame charts. So these are the three names from the pharma pack which look very attractive and would be looking to have bullish bias into these spaces.
Okay, before we take it across to Vineet Balinchkar, let's also hear it out from Aditya Puri on his latest book, Aditya Nama, all the learnings that he had right from starting off setting up HDFC Bank up until his stint at Carlyle.
World is sounding bullish. You hear the World Bank? What does the World Bank say? I don't know what Prime Minister Modi did, but he's woken up an elephant. You see the procession of the foreigners coming in. You hear the IMF talk. You see the way the country is treated with respect. So that is there. But there are fundamental reasons. इस दुनिया में कोई ऐसे ही नहीं होता. It is because of the position we find ourselves in. The world is slowing down. The US will probably go from 1.8 to 1% or below. Europe will be in a recession. China went from 10 to 6, it will come down to 3. Hindustan, Jindabad, 6 to 7%. But more importantly, we are structured in such a way that this is Hindustan ka time for the next few decades.
Yes, sir.
Number one, we have a strong democracy, a democratically elected government which is stable, has clear policies across foreign affairs. I love it. Oh, Europe is telling us कि gas nahi lo apne aap, you buy more gas in one. So now it took a lot of guts to say, you know, we know what's good for us, which never used to happen. Same goes for defense. We are at the lead in environment and inclusion. You look at digital. We have maybe the largest, could be largest or second largest, mobile phones, internet usage, our India stack, UPI, etc., which will allow democratization of technology. Also, we have people who will allow us in services to, which will move to data services, which is a good export. And I would recommend the government look very carefully that our storage and other data storage things match global standards. Nahi to log nahi aayenge. So that's digital. Then you come to the demographic dividend. People say it could be a curse. No. People are qualified. They can be re-qualified. And now with the working of remote, I think that in itself, as we go forward, out of every 122 people that come into the working age in the world will be from India. The demographic dividend is there. And then you look at the economy itself. So we are focusing on manufacturing, whether it's PLI, whether it is China Plus One, whether it is focusing on our strengths, whether it is MSME, whether what we want to do in semi-urban and rural India, just manufacturing. If you look at it, if we increase our manufactured exports by 0.5%, GDP goes up 4%. Right? We also have, whereas we do have high consumption, but compared to the world, very low. Whether it's cars, air conditioners, aircraft, motorcycles, all of that. So the demand is there. We followed very good policies. America, between the real rate of interest and their actual rate, is very far off. We will actually, I don't know what the RBI governor is going to do today, but we would almost move to a positive real interest rate. और जब दुनिया ने हमको बोला था फेंको पैसा नहीं फेंका, so we have a good fiscal situation. We focusing on bringing inclusion, using various techniques, whether it's Jandan, whether it's subsidy, whether it's promoting manufacture, whether it's microfinance, you name it, or whichever, the missions on health, the health mission, the education mission. I want to be involved in trying to see that everybody gets healthy and gets credit, but not as a worker class. Aapke jaise nahi.
Sure. No, but I'm sure people are approaching you. And do you have the urge to go back?
Available when able. But of course, India is a great place, and we should be proud of it. We are today the 5th largest economy. Will be the 3rd largest economy in 5 years.
Time to move on. Vineet Bulinchkar is with us, Head of Research at Ventura Securities. Hi Vineet, good to have you on board. It's a listless market at hand, but there are select stocks that are in the spotlight. Why not start off by getting your take on some of those gas stocks, largely on the back of that the decision on domestic APM natural gas prices being deferred?
I think because of that, we are seeing the the price correction happen. But eventually, we believe that the price deferment cannot be postponed for very long, and prices, input costs will come down, and you should be looking as a contraplay to buy into the gas stocks at the current levels.
Important event, even though this is a truncated week, but all eyes are also going to be on the MPC meet, and economists and bankers are predicting a 25 basis hike in the policy rate. They're also expecting a switch of stance from withdrawal of accommodation to neutral. Harsh joins in from our research desk to highlight what his poll is actually throwing up. Harsh?
Well, absolutely, Aisha. You said it, 25 bips is largely the consensus on the street. And really, that takes the repo from 4%, which was the case same time last year, to 6.75%. That's a steep hike in terms of the way the repo has moved over a period of just one financial year. But let's quickly look at some numbers, right? The first metric that the RBI largely looks at is inflation. So let's look at the inflation graph and the manner in which it's really gone off over the last year or so. And inflation has kicked through very, very sharply higher. It was higher in the month of June, 7.1% in the month of June. And of that, it's come off slightly lower. It's currently at around 6.5%. Where we currently stand at. In fact, inflation went up and in fact came lower at the end of the last calendar year before it spiked back up. So you can see the graph there. It had come down to 5.7%. Let's quickly take it to the larger inflation picture going forward. The RBI estimates that inflation will be below 6% in FY24. So that's a positive. But the manner in which that is to happen is, of course, still in question. And what they also expect is 5.7% in Q4. So whether there's a revision to that is something that we will have to keep our eyes out on. And, of course, then spillover on the FY24 revision as well. And that will, of course, drive rates going forward. So any commentary around that will also help. The other piece that's, of course, the main piece is the growth. Growth has come sharply off. We were closer to 8% on RBI estimates at the start of last year. We've closed the year at close to 7%, hopefully. And we're expecting FY24, rather RBI is expecting FY24 at 6.4%. So RBI will have an eye out on that as well, because as the rates have gone up, it's possible that growth will start to come under more and more pressure. So an eye out on the growth trajectory as well is something that RBI will look out for. In terms of just general metrics and what's really driving the RBI to a 25 basis point rate hike, one is, of course, the larger global macro environment. And here are some numbers just broadly listing down the larger picture with regard to crude and other variables that the RBI looks at last meeting versus this meeting. But of course, the Fed continues to hike, and that may also push the RBI to hike. So some commentary around global macros will also be anticipated.
Thanks very much, Harsh, for giving us those details, and that's the real macro context and what the poll seems to be suggesting. Vineet, I wanted to get in your take then on the auto space as a whole, given the fact that we are looking at the auto sales numbers. It's been a bit of a mixed bag this time around. Is there anything that stood out within that space?
We continue to like Maruti and we continue to like Tata Motors. We believe that Tata Motors will lead the pack and growth will be much better than the rest of the sector. And that's where we stand as far as the numbers are concerned. We are quite bullish on Tata Motors and we expect very, very reasonable growth to play out there. Apart from that, we expect that internationally JLR volumes would also stabilize, and they've taken a number of measures to, upend the free cash flow generation. So we remain positive on that story.
Before we begin winding up for the day, let's get in some BTST trades going as well. Kunal, on your list?
So two buy calls. First is a buy on Vatek Wabag, the stock breaking past about 360 levels. So would suggest a buy, 385 as a target, stop loss at 354. Century Textile is the other stock which has given a swing breakout on the daily charts. So that's a buy, targets of 688, stop loss at 640.
Okay, two buy calls coming in from Kunal. Naresh, what's your BTST list like?
Two stocks which are showing bounce back after a good correction. First is a buy on Laurus Lab, a stop loss at 298 and a target price of 315. Second is a buy on UPL with a stop loss at 720 and a target price of 745.
All right, there you have it. Those are some of the closing strategies that our chartists are flagging off. Meantime, Kunal, what about your outlook on the charts for some of these real estate counters, IBREL, Sobha, etc. After the kind of move that we've seen in the last 1 month, do you think it's a good buying opportunity?
Well, I would not look to buy these kind of stocks from the real estate pack. I think I would still favor the likes of maybe DLF, Macrotech Developers, Anant Raj. These are the few names which have been a lot more decent charts for themselves as compared to the likes of Indiabulls Real Estate, which I think has been a stock which has beaten down significantly over the last couple of years. So that would not be the preference list. DLF specifically, I think at this 350-55 mark would be a good zone. The stock has established multiple supports at this 355-360 mark for itself. So that becomes an attractive buy. Even Anantraj Industries, I think closer to 120 levels, the stock has confirmed a breakout of a multi-month time frame. So that's also that also looks very attractive, and would look out for maybe another 15 to 20% plus kind of an uptick on the stock.
I think Anantraj is also sitting at its 52-week high, if I'm not mistaken. Couple of the power names as well are holding a buzz. Tata Power has seen a 2% move. NTPC, of course, has been a strong one all through last year and right now as well, no different. IEX holding up nearly about 4%. And Naresh, you've been quite bullish on the prospects of IES. Continue to hold long?
So got stopped out on that one. The stock actually moved up from 140, went up to 155. But it saw a sharp decline, and there was news about Dalmia exiting. So technically, the stock has again come back to the same prices where it actually bottomed out. 125 to 130 was the place where it all started from the rally in 2021. The recent lows were around 130, broke it for a day, but we've again back above those levels. So for now, I would wait for a move beyond 140 to again get back into the stock. Although the expectations were high, the stock did not perform as much. But technically, it is a basing out formation. Eventually, once it breaks above 150, that is where the momentum will be pretty strong.
Momentum is pretty strong for the market as a whole. We are inching towards 17,400 at the index level, and I think part of it is also led by what's happening across the globe. Because European markets are holding up in the green comfortably, and the pre-market rates from US, at least with respect to Dow, are suggesting an uptick of around 100 points. So that's something which is supporting the sentiment as well. Yes, at the highest point of the trading session, 17,400 scaled, but a bit of a resistance around that zone. Vineet, wanted your take regarding KPIT Tech as well, because that stock fundamentally looked all right. They have been reporting good order wins. The earnings have been rather strong. But now the street is factoring in that everything is good at a price.
So, we continue to remain skeptics on the entire software pack without exception, primarily because, we are expecting the de-dollarization trend that is catching up globally to, significantly impact the earnings of all the IT stocks. And this will continue to play out over the next 6 to 8 months. And until the new BRICS currency is announced, and we need to see how the world will adjust to these dynamic changes in currency, because your business model suddenly now goes for a toss if the currency is having some kind of extreme moves. So keeping that in mind, we are expecting a significant volatility in the IT space, and it is going to have impact of three factors. One is the currency that we just spoke about. Two is, recessionary pressures. And three is the pressure from AI that is going to build on the business models of service companies. So we will be staying away from this space until some kind of clarity emerges over the entire way the sector will play out.
Away from services, but one space which is the so-called sunrise sector perhaps for the next decade is manufacturing, right? And one of such names is Keynes Technology, which is up around 9%. How are you playing the manufacturing theme, the China plus one, Europe plus one theme, etc., Vineet?
That we are absolutely optimistic about. We feel that that is one place where the sectoral rotations from the services sector will now start moving into. So manufacturing and outsourced friendly shoring, as we see happening in India, will definitely do well. Keynes Technology is one of those stocks which fits into that criteria. And we are also looking at the other sectors in India in manufacturing, notably the consumables. So we think one sector which is could start gaining traction is the space of welding companies. And we think they should do well going ahead.
Vinit, before we let you go, just leave us with some of the other stock ideas where you think investors can buy into right now.
I think banks look good. We like the banking story. It will remain intact once this, once the market prices in this 25% hike. We believe that there would be that will be the peak in the status of the interest rates, and then we will see a repricing of bank stock take place. So HDFC Bank, Axis Bank, ICICI are some of the favorites that we'd like to.
Wind it down then, and let's wrap up today's trading session. We have the index which ends pretty lackluster around the 17,400 mark, given that it's truncated week. But although we said there are very important cues to watch out for, no real surprises to be ending around this level. That breadth, though, is in favor of the gaining side. And in terms of the Sensex, we're up about 133 points. Not quite different for the broader market, but yes, that slight outperformance is evident, close to 1% higher for the mid-caps. Auto is gaining traction, PSU Bank's in the green, and real estate as well, adding a little bit of support. Metals, IT, FMCG, they're completely sitting it out. To the winners then, and Hero Moto at the top of the heap, and it's really been all about autos today. Bajaj Auto, Maruti Suzuki, Eicher Motors, they're all in the limelight on the upside, along with the Tata Motors at 424. Coal India as well adds to the fervor. You've also got an ONGC, Bajaj Finance, along with Bharti Airtel. On the flip side though, BPCL, ITC, Infi, HUL, JSW Steel, those are some of the prominent losers in today's trade. Run you through then some of the newsmakers in today's trading session, and without a doubt those gas stocks have been in the spotlight. The decision on the domestic APM natural gas price from the 1st of April, now that's been deferred to a later date. KPIT Tech, remember JP Morgan initiated an underweight rating as coverage with a 520 rupee target price, saying that the valuations at 50 times forward PE look excessive. The stock has really borne the brunt of that. And then the likes of RVNL, GR Infra, Tejas Networks, they've all been in the spotlight largely on the back of order wins for some of these counters. Auto sales as well have kept a lot of the counters in the spotlight. It's been a bit of a mixed bag then for the month gone by. So those are some of the newsmakers in today's trade. Meantime, you've also got the Brent crude oil prices, remember, that have risen. That's largely on the back of the OPEC plus oil meet that took place today. So Oil India, Manali Petro, BPCL as well, all in focus on the back of that news bit. On the from the broader markets, Rail Vikas Nigam, as we highlighted, Vaibhav Global, Advanced Enzymes, something like an SIS Limited, Minda Corp, Johnson Controls, Maharashtra Seamless, those are some of the stocks that have gained traction, while Capri Global, Orient Electric, SCI, Karur Vysya, along with Godfrey Phillips, AU Small Finance, as well as IIFL Finance, those have been some of the stocks that have lost out in today's trading session. So all in all, a fairly flattish day of trade. That outperformance within the broader markets, well, that was certainly noticeable in today's trading session.
Okay, important to look at what the global markets as well are up to, because while tomorrow we're going to be off for a trading holiday, but the global markets would very well be still on. So the Dow futures right now are scaling higher by about 100 odd points, but that's not quite the case with S&P or for that matter NASDAQ. I think it's the NASDAQ futures which currently deserve attention because they're trolling down by almost 100 points, and that's a 0.6% loss that they're hinting at, and a flat move for S&P futures. Of course, day after is when we will have the RBI as well entail its monetary policy. So yes, in a tentative zone, that's how the market is shut shop for the day. Absolutely quiet, just lurking around that 17,400 mark. Autos pretty much were the only deal in the town. But we're going to wind it up right here on this edition of Closing Trades on that note.